Welcome to the deep dive. We're always on the lookout for ways to navigate the market smarter, especially for those of us who might not have the time or resources of Wall Street veterans.
Exactly.
Today, we're going to zero in on a really fascinating approach. Using copy trading systems powered by artificial intelligence and, proven algorithms. Think of it as potentially tapping into some serious trading firepower. And our mission today is to explore how this could be a real game changer for you, the similar investor, and, crucially, to give you a clear 5-step plan to get started.
Yeah, the core idea here is leveraging technology and established strategies. Can we potentially shortcut our way to better results by essentially following in the digital footsteps of systems?
Yeah.
Systems designed to analyze the market with a level of precision and speed that's just tough for an individual to match.
Right.
We've looked at sources ranging from the practical insights on identifying market patterns from the Bitcoin trading YouTube channel to user experiences on platforms like BitCopyTrader, and also some broader strategies for managing crypto investments from digital currency traders. Lots to unpack.
Okay, so let's break down the basic concept first. Copy trading, at its heart, it's about mirroring the trades of another trader, right?
Fundamentally, yes.
Now, what elevates this in our conversation is the focus on those traders, or maybe more accurately, systems utilizing AI, artificial intelligence, and those built on solid data-backed algorithms.
Exactly.
It's the idea of potentially moving beyond just gut feeling or, reacting to news headlines and instead aligning with strategies driven by logic and just vast amounts of information.
Precisely. The real appeal of AI and algorithmic trading for, the small investor comes down to their ability to process mountains of data. Think years of price history, trading volumes, maybe even things like social media sentiment.
Wow.
And to identify subtle patterns and potential trading opportunities that a human might just overlook, especially if you're juggling a full-time job and, life.
Which brings us to something really intriguing from that Bitcoin trading video, the concept of a trading approach that takes no brains and very little money. Now, okay, while the phrasing is definitely attention-grabbing.
A little clickbaity, perhaps.
Maybe a little, yeah. But there's a fundamental idea there about simplifying and, maybe to some extent, automating your trading.
And what's fascinating there is the specific pattern they highlight as an example, the 1-2-3 bottom formation that might appear after what they call a capitulation low.
Okay, explain that a bit. Capitulation low, 1, 2, 3, bottom.
So imagine a stock or a crypto price dropping sharply. That's the capitulation, like everyone's giving up. Then you see a slight bounce, maybe another dip that doesn't go as low as the first one, and then a rally. That sequence, low, bounce, higher, low, that's the 1, 2, 3 bottom. It can be a visual signal of potential buyer strengths coming in, a possible turning point. And an algorithm can be programmed to automatically recognize this kind of formation across loads of different assets instantly.
And then the video introduces this go wide and small strategy. Can you paint a clearer picture of how that works in practice and why it might be beneficial?
Yeah, so building on that pattern recognition, the go wide and small strategy suggests investing small amounts of capital across a diverse range of assets that are all showing similar promising patterns, like those 1, 2, 3 bottom formations after a big low.
Right.
Think of it like casting a wider net, Instead of betting big on one thing,
Gotcha.
you invest a little bit in many such opportunities. It increases the chances that at least some of those investments will yield significant gains. The video specifically mentioned the potential for some smaller cryptocurrencies, showing this pattern to experience really substantial upward moves, like a tenfold increase.
A tenfold increase. Okay, that's the kind of potential that's definitely hard to ignore. But you knew this was coming. We always need to talk about risk. How does this go wide and small approach, especially when automated, factor in risk management?
Super critical point.
Yeah.
The Bitcoin trading video does touch on risk management mainly through using stop-loss orders.
Okay.
These are basically preset instructions you give your broker or the platform to automatically sell an asset if it drops to a certain price level. So by placing these stop-losses below key technical levels related to that 1, 2, 3 bottom formation.
Like below the lowest point of the pattern.
Exactly. Or maybe just below 0.3, the higher low.
Yeah.
You're essentially limiting your potential loss on each small investment. They even use this interesting analogy, turning these small investments into an insurance policy.
An insurance policy? How so?
Well, you pay a small premium. That's your defined potential loss. If the stop loss gets hit, in exchange for the possibility of a much larger payout, that potential 10x gain, if the trade works out. It defines your risk up front on each small bet.
Okay, so the potential appeal is becoming clearer. AI and algorithms sift through data for patterns. A strategy like go wide and small diversifies bets on those patterns, and you have built-in risk controls with stop losses. But how does an everyday investor like you or me actually get access to these sophisticated tools and strategies? Seems complicated.
Well, that's precisely where copy trading platforms come into the picture. Think of them as the bridge. They connect investors like you with experienced traders and, crucially for our discussion, with these AI-powered and algorithmic trading systems. They provide the whole infrastructure for you to essentially mirror the trades being executed by these systems.
And platforms like BigKit, which we saw mentioned in our sources, they play a key role here. What exactly do these platforms offer in this context? How do they work?
Right, so platforms like BigKit act as a marketplace, really. They showcase the performance of various traders and increasingly automated trading systems or bots.
Yeah.
You can typically see a whole range of data. Things like their historical win rates, the percentage of trades that were profitable, their overall profit and loss figures, usually shown as a percentage return or P&L curve. Also the types of assets they tend to trade, crypto, Forex, stocks. And sometimes even an indication of their risk profile, like how much their portfolio value tends to fluctuate, sometimes called drawdown.
Okay, so it's like browsing profiles, but for trading strategies.
Kind of, yeah. It allows you to browse through different options and potentially identify systems whose trading style and, importantly, their past performance align with your own investment objectives and how much risk you're comfortable taking.
And our source material even pointed to an A-Online profile on BitJit as an example, someone focusing on consistent profitability while managing risk conservatively. So it's not just about chasing the system with the absolute highest returns, right? It's also about looking for stability.
Exactly. That's a vital takeaway. The sources really emphasize that choosing the right account to copy, whether it's run by a person or an AI system, can make or break your strategy.
Make or break. Strong words.
Yeah, it highlights the importance. You need to do your due diligence. Understand the approach, look at the track record, see how consistent it is. You're entrusting your capital, even if it's a small amount to start.
Okay, this all sounds like it has real potential for someone looking to, maybe improve their trading outcomes without needing to become a full-time market analyst themselves.
Yeah.
So for someone listening who's intrigued by this, maybe thinking, okay, how do I actually do this? Hey, what's a practical way to get started? Let's map out that concrete plan you mentioned.
Excellent idea. Let's lay out a 5-step plan, something actionable for getting started with copy trading these AI-powered systems effectively.
All right, let's dive in. Step 1, where do we begin?
Research and identify platforms. Okay, your first crucial step is simply to explore the different copy trading platforms available to you. Not all platforms are the same, obviously.
Right.
And you want to specifically look for those that offer access to traders, or even better, directly to systems that explicitly state they utilize AI and algorithmic trading strategies. Sometimes they label them as AI bots or algorithmic strategies.
So filtering for the AI algo focus, beyond just finding platforms that offer that, what else should someone be looking for at this initial research stage?
Oh, definitely understand the platform's fee structure. That's critical. What are the costs involved in copy trading? Are there subscription fees you have to pay to follow certain traders or systems?
Good point.
What are the trading commissions or spreads like? These costs eat into profits. Also, very important, ensure the platform is reputable and operates under appropriate regulations in your country or region. Security of your funds has to be paramount. Don't just jump onto the first platform you see.
Makes perfect sense. Lay the groundwork, choose the right venue. Okay, what's step 2 once you've maybe identified a couple of promising platforms?
Evaluate trader performance and strategies. Okay, once you have a short list of platforms, the next critical step is to thoroughly analyze the historical performance data of the actual traders or systems you're considering copying. Don't just get swayed by, like, a huge percentage gain over a really short period. Dig deeper.
What are the key things, the metrics or aspects of their performance that you should really be scrutinizing?
Well, consistency is a really important indicator. Look for a track record of sustained profitability over a longer time frame, months, maybe even a year or more, if available, rather than just a few lucky big wins.
Right, not just a flash in the pan.
Exactly. Examine their risk management practices. Do they experience large drawdowns? That means significant drops in their portfolio value from its peak. How big are they? How long did they last? What kind of stop-loss strategies do they seem to employ if the platform gives any insight?
Okay.
Also pay attention to the types of assets they typically trade. Is it mostly Bitcoin, altcoins, Forex? Does that align with your investment interests and your own risk tolerance?
Yeah.
As the Bickett source mentioned, looking at the ratio of profitable trades to losing trades, the win rate can be insightful, but it's not the whole story. A high win rate on tiny profits might not be as good as a lower win rate with much bigger winning trades than losing ones.
That's a good point. So look at the profit factor or average win versus average loss too.
Precisely. And most importantly, try to understand the underlying strategy. If the platform provides any information about it, is it clearly defined? Is it momentum-based, mean reversion, something else? Does it seem logical to you even if you don't grasp every single technical detail? Does it make sense?
So it's really about looking beyond just the flashy headline number and trying to understand the traders or system's overall approach and, crucially, their risk profile. Okay, what's step 3 in our plan?
Start with a demo account, if available, or small capital. This is key. If the platform you choose offers a demo account that's a simulated trading environment with virtual money, absolutely take advantage of it. Use it.
Why is that so important?
It's just invaluable for familiarizing yourself with the platform's interface, how it all works, and the actual mechanics of copy trading without putting any real capital at risk. You can see how the trades are copied, how quickly they execute, how the system performs in different live market conditions, but with play money.
Okay, practice first. But what if a demo account isn't an option on a particular platform? What then?
Right. Not all platforms offer them. If a demo account isn't available, then the advice from the Bitcoin trading video about starting with very little money becomes especially pertinent. Crucial even.
Okay.
Begin with a small amount of capital. And I mean small. An amount that you are completely 100% comfortable potentially losing. This echoes that strategy discussed in the digital currency traders videos about employing smaller position sizes across more markets as a way to diversify and manage risk, especially when starting out. You're essentially testing the waters with minimal exposure.
That cautious, dip-your-toe-in approach seems like the most prudent way to begin.
Definitely. Okay, what's step 4? You've done the research, evaluated traders, started copying with a small amount. Now what?
Monitor and adjust. Okay, this is vital. Copy trading should not be viewed as a set-it-and-forget-it kind of a deal. It just isn't. You need to regularly monitor the performance of the trader or system you are copying. Keep an eye on their key metrics, their win rates, profitability, drawdown, risk metrics over time. Don't just check it once a month.
And what kind of changes or signals should prompt you to maybe consider making adjustments, like stop copying someone or reduce the amount?
Well, if you observe a significant shift in their trading strategy, maybe they suddenly start taking on much higher leverage or risk, or they begin trading completely different types of assets you're not comfortable with.
Okay.
Or, more obviously, if you see a sudden and sustained decline in their performance that deviates significantly from their historical track record. These could be red flags.
It might be time to reduce the amount of capital you're allocating to copying them, pause copying them, or maybe even stop following them altogether and look for another option. As those digital currency traders videos point out, market conditions change constantly. Bull markets, bear markets, sideways chop. The strategy you're copying might be brilliant in one environment, but struggle in another. You need to be ready to adapt, or at least be aware if the system isn't adapting.
So it's really an ongoing process of evaluation and adjustment based on performance and whether it still aligns with your own goals and risk tolerance. Makes sense. What's the final step in our 5-step plan?
Continuous learning and risk management. Right? Even though you are leveraging the power of AI and algorithms, it's still really beneficial to continuously learn about trading in general and, if possible, about the specific strategies being copied. The more you understand, even at a basic level, the better equipped you will be to make informed decisions about who to follow, why they might be succeeding or failing, and when to make changes. Don't just blindly follow.
And the importance of managing risk within your overall financial picture, that can't be overstated, can it? It's not just about the copy trading part.
Absolutely not. Always reiterate the importance of risk management within your broader investment portfolio. The digital currency traders videos suggested thinking about how much of your overall wealth you are comfortable allocating to potentially higher risk asset classes like cryptocurrencies. They threw out a figure like 20% as a possible guideline, but that's very personal.
Right, depends on the individual.
Totally. And then within that allocation, decide what portion you are comfortable dedicating specifically to copy trading, which might carry its own unique risks. And please remember, engaging in copy trading, especially with volatile assets like crypto, should ideally be just one part of a well-rounded financial plan that includes diversification across different asset classes, stocks, bonds, real estate, whatever fits your long-term goals. Don't put all your eggs in one basket.
Okay, so to quickly recap our 5 steps then. 1, research platforms, focusing on AI algo options and checking fees regulation. 2, carefully evaluate trader performance and strategy, looking for consistency and understanding risk. 3, start small, ideally with a demo account or with very little real capital. 4, continuously monitor performance and be ready to adjust or stop copying. And 5, keep learning and always manage risk within your overall financial plan. That seems like a very practical and actionable plan for anyone interested in exploring this.
It really provides a structured and considered approach, doesn't it? Engaging with copy trading AI systems, but emphasizing informed decision-making and risk mitigation, which are just essential for every investor, but particularly maybe for those managing smaller amounts of capital who can't afford huge mistakes.
So to bring it all together, these copy trading systems, the
Yeah.
ones powered by AI and proven algorithms, they do present a really compelling opportunity, especially for small investors, to potentially access more sophisticated trading strategies and, aim for improved results. It's definitely not a guaranteed path to riches.
No, definitely not.
And careful research and risk management are absolutely paramount. But that combination of potentially cutting-edge analysis and the ability to mirror established disciplined approaches, it could be a significant advantage.
Precisely. And by following a well-thought-out plan, like the 5 steps we've just outlined, you can hopefully navigate the world of copy trading more confidently and make choices that actually align with your individual financial goals and your personal risk tolerance.
And that leads us, I think, to our final thought for you today. Considering the ever-increasing capabilities of AI in analyzing market data and the potential for disciplined, emotionless execution through algorithmic trading, how might thoughtfully leveraging these tools, maybe via copy trading, reshape your own investment strategy? What further questions do you have about rigorously evaluating the proof behind these so-called proven trading algos?
Yeah, how proven is proven? Good question to ask.
It really is. We encourage you to explore the available platforms, maybe delve deeper into the strategies that capture your attention, and just continue your journey of financial learning. Thanks for joining us for this deep dive.